This is Rick Rule for Rule Investment Media, sponsors of the Boca Raton Natural Resources Investment Forum. Today, I am delighted to be able to interview a friend of mine of very long standing, David Garofalo, currently CEO of Gold Royalty, Inc. David, first of all, thank you for 3 decades of delivery for natural resource investors, but thank you much more specifically for your ongoing support and attendance at the Natural Resources Investment Symposiums. It's a delight to have you with us.
I'm delighted to be here, Rick. Thank you so much.
Let's jump into it. I want to talk about the human resources at Gold Royalty first. Tell me something about the officers and directors, the experience that they bring, what's unique about that experience, and how their resumes are suited to the task at hand. After that, we'll talk about the task at hand. Who are you? What have you done? Why should my audience care what you have to say?
You know, you've hit on what's probably the most unique competitive advantage we have relative to the smaller cap royalty peers in our space, and it is our collective experience. We have over 400 years of industry experience in our board and management, and I'm not talking about experience from a financial perspective. We're builders and operators of mines, which again is a unique value proposition for a small cap royalty company, and we've been as careful about curating the people in our organization as we have been about curating the assets. And a lot of people around the boardroom table have similar experience levels to me. And that includes Warren Gilman, who runs Queen's Road Capital out of Hong Kong, mining engineer by training, 35 years of industry experience. Alan Hare, who's also on our board, 35 plus years of industry experience as a prolific mine builder and operator as well. Amir Adnani, my co-founder of Gold Royalty Corp, and many of you know him from the uranium space as well, a prolific entrepreneur in the sector. And John Griffith, who's our Chief Development Officer, 30 plus years of investment banking experience, most recently leading Merrill Lynch's mining group. And Andrew Gubbles, who's our CFO, 20 years of industry experience as an investment banker, most recently leading UBS's mining group. So we have a great collection of technical and financial people with a lot of industry experience, which I think has allowed us to grow our business out very rapidly.
David, you neglected this guy named David Garofalo. Perhaps you could tell us a bit about him.
Well, over 30 years in the business, I've been involved in the construction of 15 mines in my career, operated countless more. Most recently, I was the CEO of Gold Corp and engineered what was, until recently, the biggest gold merger in history between Newmont and Goldcorp. And Newmont then eclipsed it now with the Newcrest deal, but also ran Hudbay on the base metal side and was CFO of Agnico Eagle for 12 years through its rapid expansion in the early part of this century. So I've been very fortunate to have operated and worked with some very, very strong operating and development people within the business over my career.
Very helpful. So now let's talk about the task at hand. Tell us something about the genesis of Gold Royalty, and I guess by necessity, Gold Mining Inc., the sort of buy low, sell high story.
Yeah, well, look, Gold Mining Inc. is our former parent company. We were spun out of Gold Mining Inc. a little over 2 years ago in our IPO in March of 2021. And Gold Mining Inc. is a collection of development stage assets that Amir Adnani, the founder of Gold Mining, accumulated at the bottom of the cycle, paid 10 cents on the dollar for them, accumulated a global resource of over 32 million ounces of gold equivalent on these dozen development stage assets throughout the Americas. And he patiently waited for the gold cycle to turn. And we met in 2019, and he was looking for a way to daylight value just as the gold price started to accelerate upwards. And one of the ideas we landed on was to write royalties on these development stage assets and then create a separate royalty vehicle, which we did. I spun that out in March of 2021, raised $90 million US. And what we saw in front of us was a highly fragmented royalty industry with a lot of smaller cap players. And we saw the potential to roll our way up to rapid increase in scale. And we bought Ely Gold, Golden Valley, and Abitibi royalties over the course of 2021, and also accumulated some other royalties through project financing, royalty generation, and third-party royalty acquisition, and rapidly grew our royalty portfolio from 18 on initiation to now over 220 royalties across the Americas.
That's obviously a very, very, very impressive track record. Tell me now, how you plan to add value, or in the words of the great American financial expert, Janet Jackson, what have you done for me lately? Where do we go from here? How do we turn this disparate but vast collection of gold royalties into cash and fist?
Well, we're well on our way in that regard. The great thing about this model and our royalty portfolio in particular is those 222 royalties that we own today are completely bought and paid for. And they're delivering 60% compounded annual growth in revenue through the end of the decade. And we don't have to put another dime into them. Our operating partners are well capitalized. They're advancing these projects and expansions to fruition over the course of the next several years to deliver that revenue growth. And really, all we have to do is sit back and harvest and generate strong returns on the investments we've already made and distribute those returns to our shareholders. I should add that 10 months after our IPO, we already initiated a dividend. We already have a 2% yield on the stock. And given that our cost structure is very, very low, we only have 8 employees, and we could run a business 10 times the size with the same 8 employees. We have very flat G&A, and every incremental dollar of revenue growth falls right to the bottom line, increases our potential to raise our dividends over time. So we're in a very good position, a unique position, with virtually no debt on the balance sheet, well-capitalized balance sheet, with assets that are already bought and paid for to deliver increasing returns to our shareholders over time. But on top of that, because we have well-capitalized operating partners, they're investing hundreds of millions of dollars per annum in exploration on their properties. And we contribute nothing to those exploration budgets, but we get the benefit of the exploration upside they achieve through their exploration efforts. Last year alone, our operating partners invested over $200 million, and that's the equivalent of 700,000 meters of diamond drilling on their properties. And we got the benefit of the increase in resources that their exploration efforts delivered. And again, that's another attractive feature of this model. And not only are we getting leverage to the gold price and completely insulating our shareholders from cost inflation, but we're also getting the exploration upside without actually having to contribute to those budgets.
And can you hit some of the high points, some of the royalties that, I realize with 220, you love them all. But can we segregate a little bit and tell me the ones that form the bulk of the value now and the ones that you're particularly excited about that are development stage going forward?
Yeah, there clearly is a lot of optionality in our portfolio. When you have 222 royalties, that does provide our shareholders a lot of optionality, but there are some foundational, fundamental cornerstone assets that really make up the bulk of the value, and you've alluded to that. We have a royalty in the 3 biggest producing gold mines in North America. We have a royalty in Canadian Malartic, which is already producing in Quebec, and Agnico Eagle recently consolidated in the takeover of Yamana. We have a royalty on the underground extension of Goldstrike, which is the cornerstone asset of Nevada Gold Mines, which is the joint venture between Barrick and Newmont in Nevada. And we have a royalty on Côté, which will be Canada's 2nd biggest producing gold mine when it comes into production in the first quarter of next year. So we have a quality proposition, not just a quantity one, in some of the best assets in the best jurisdictions. 80% of the value of our business is in Nevada, Quebec, and Ontario, which judged by the Fraser Institute is perennially among the top 5 in the world for mineral potential, low political risk, and low regulatory risk. So we have some very distinct advantages in the quality of our portfolio, the location of our portfolio, but the scale of our portfolio. We have chunky assets. I should hasten to add, Franco-Nevada was built on the foundation of one asset initially, Goldstrike. Ironically, we have a royalty on the underground extension of that mine, but we have 3 foundational assets within the portfolio. And I can't imagine that there's anybody in the industry that can say that, even the big guys within the industry right now. But clearly among the smaller cap players in the royalty universe, we have a distinct competitive advantage in terms of the quality of our portfolio.
And tell me something about the development stage assets beyond Côté.
Certainly, we have, for example, the Ren underground extension of Goldstrike, which has an initial resource of 2 million ounces, over 7 gram a ton material, so effectively 7 times the grade that they're mining from the open pit at Goldstrike. And Barrick has come out and said that they expect this will be a 3 to 5 million ounce deposit minimum, and likely to be incorporated into the mine plan in the short term, given its proximity to infrastructure just off the bottom of the pit. And so we expect it'll be integrated into the mine plan in short order. Another longer dated opportunity is Fenelon. in along the Detour District. Wallbridge is the 100% owner of that asset. We have an exclusive royalty on that as well. And Tony McCush, the former CEO of Agnico Eagle and Kirkland Lake, is now taken over as executive chairman. And Tony's track record is to bring these projects to a point and then sell them on to a more experienced operator. And given its proximity to Agnico Eagle's Detour mine, Agnico Eagle's share ownership in Wallbridge, we have some confidence that eventually this will be integrated into the existing Detour complex in fairly short order. And it already has a 4.5 million ounce resource on it. So a very significant chunky deposit in a great jurisdiction right near massive infrastructure that's already built out.
It's interesting that you allude to Franco-Nevada, and I think it's worthy to bring out to the people listening to this that original Franco-Nevada acquisition was a $2 million capital expenditure, which has now paid out $1 billion. People occasionally say that they think that the royalty business is boring. And the idea that you can make a $2 million acquisition that pays you $1 billion doesn't meet my definition of boring. The other thing that I like about your story that really bears repeating is the fact that your gross is your net. Other people are responsible for the indirect G&A around the mines. Other people are responsible for the operating expenses. Other people are responsible for the capital expenses. Other people are responsible for the exploration expenses, and you get to cash checks. If you could go into what you see as the operating margin on your existing royalty, I think that they would open the eyes of our attendees, particularly those attendees who are business owners.
Yeah, when we're at full ramp up of our cash flow growth over the coming years, we're effectively a 90% margin business. And I can't think of any industry that delivers those kind of margins. And again, while insulating you from cost inflation, both on the capital and operating cost side, with on the mine site, we're a strictly top line exposure business. And so if you believe in gold as an asset class, this is the best place to be positioned. It gives you optimum leverage to the gold price, optimum leverage to the exploration on these underlying assets, which our operators are funding for us, while insulating you from cost inflation in the industry.
Finally, my subscribers like a curated experience. To the extent that they want to know more about gold royalties, and they should, who should they contact and how do they reach them? I'm particularly interested in people reaching out to the company before the conference. So at the conference, they use your time asking you good questions.
Sure. Peter Benke is our Manager of Investor Relations and Corporate Development. He's based out of Vancouver. You can certainly reach him through the goldroyalty.com website or his email address, pbenke, pbehncké @goldroyalty.com. You can call our 1-800 number. We're very responsive. Quite often, I return calls myself to shareholders. I'm delighted to hear from them. Peter quite often passes them on to me if they have a particular question and they want to engage with me directly. We're very much a hands-on management team, and that's true for all of our key senior management. They're more than happy to talk to shareholders.
Well, David, once again, I'm delighted that you subjected yourself to this interview, and more delighted that you've continued as a sponsor of the Natural Resources Investment Symposium. I look forward to hosting you down in Boca Raton, and I know that a large number of shareholders will be present to see you and cheer you on.
Well, you never disappoint, Rick, so we're looking forward to being there.
Thank you.